Be specific. Are you saying that vatable purchases or expenses will be disallowed if VAT wasn't paid on them? I think this person is referring to provisions regarding, if you have bought something, you have used them in your business, but for whatever reason, there was no VAT charge on the expense, on the invoice. You will not be able to claim capital allowance on that. You will not be able to take deduction for that. And this person wants you to just say yes or no and then maybe explain. So Chinedu, I'll come to you still on VAT, right? And this particular audience is asking a question. It says, to be specific, are you saying that vatable purchases or expenses will be disallowed if VAT wasn't paid on them? I think this person is referring to provisions regarding, if you have bought something, you have used them in your business, but for whatever reason, there was no VAT charge on the expense, on the invoice. You will not be able to claim capital allowance on that. You will not be able to take deduction for that. And this person wants you to just say yes or no and then maybe explain.
Okay, I mean, the simple answer is yes, right? That's what I said. How it will work in practice, we what to see. The idea is that, and I think part of this is targeted at people that buy things offshore, doing imported stuff and others. Government wants to make sure that the VAT take is fully accounted for, even if you have to self-account for it. And you are allowed to self-account, because really, if you're going to get the input VAT anyway, why won't you self-account for it? It makes sense to make sure that VAT is paid and then you can take for approved VAT. So, I don't think it hurts the companies anyway to self-account for VAT, rather than risk of getting the deduction. Because someone asks you, how would they know and order? But if you have a large enough items and you purchased, it might show up. Or you have a line item, maybe within your products, a item on which you're going to pay VAT, it might show up on this. And then it's a risk that you don't want to bear. So the answer is, that's what the boss said. I'll see how that pans out. So back to what you answer about the input VAT and if you have to pay reform. One of the thoughts of the committee is that you don't necessarily have to go through the audits before you can get your reform. They are hoping that you can get your reform before the audits. Even though there's a penalty if you then if you have false claims. Because again, that's the risk. If you say people should just claim and get the money without audit. So I don't know whether FRS will really happy with that. And to your point about what happens with VAT collections versus CIT collections, I think it is for the cost for the taxpayer to be a net off, but for the FRS it will be a proper. They have to do the proper account. You can't use VAT to offset CIT within the FRS system. You have to, for the customer, is for make sure the customer has, gets value immediately. But I believe that they will have to do the accounting internally to adjust.
Yeah. Thank you very much, Chinedu. We are rounding up. I'll come to you, Yemi. There is this conversation around effective tax rate, and it also connects with conversations around minimum tax, right? So someone is asking, again, a very specific question. What is the best explanation and practical calculation of effective tax rates?
One of the things that we spotted in the initial draft of the law was the introduction of the minimum effective tax rates in the law without a definition of how it's going to be calculated, and then empowering the FRS, to determine that. But the good thing with the final published act that is in circulation is that it has defined how to calculate the effective tax rate, which is the fact that you take your net income and you take your expenses. The ratio of your expenses to your net income will determine your effective tax rate. But the adjustments that they require you to make to your net income is that you make adjustment for depreciation and personnel costs. For me, making those adjustments, could reduce your effective tax rate because the base is now higher, kind of, because you've removed depreciation. Depreciation, I understand, but personnel costs that you are removing, makes your effective tax rate a bit lower, and then we then need to now pay to bring it up to 15%. So that's how to calculate it. Now, to look at the substance of that provision, what it's saying is that if your minimum effective tax rate is less than, after you've done the calculation, if it's less than that 15%, you have to make it up to 15%.
Mm-hmm.
But it then says this applies to subsidiaries of multinationals whose group revenue is 750 million euros, or Nigerian companies who have a turnover of above 20 billion. So given the devaluation of the naira, many companies easily fall into that 20 billion threshold. And the rationale behind that is also the government saying, I know you guys have brilliant consultants like Topekolade who help you navigate the provisions of the law. So whatever tax planning you are doing, if you fall into this category, just make sure your minimum effective tax rate is not less than 15%. And that's kind of, with that provision, it kind of restricts all the tax planning you can do, because it says, I haven't gone round. You still have to come to this conclusion if you fall into that bracket. I would say that it's not an abnormal provision. If you look at what is obtainable in other crimes, is meant to, it's like an anti-avoidance provision to make sure that companies pay a tax that is fair. And it is drawn from all those OECD models where multinationals have businesses in other jurisdictions and pay little or no tax. And OECD is saying, but you're making it so much money, whatever you're making, just make sure your minimum effective tax rate is that 15%. So that's the thought behind it. We would wait and see how that really affects or impacts these companies.
I would think that beyond just Nigerian companies, I would think that it also impact Nigerian companies that have foreign subsidiaries.
Absolutely.
Because I think there's a provision that also requires when those foreign subsidiaries pay taxes where the taxes that they pay is less than
15%.
then
Make up. Yeah.
Which for me is very interesting. And I think the whole essence is to prevent this profit shifting.
Yeah.
It's essentially on basically like to my goal. Nigeria is essentially looking to see how they can get a bit more share of the tax from global, a source of revenue where Nigeria is population not be trying to say I can more for percentage as possible. And because I think like Yemi said, when you have tax consultants who are looking to shift more of the profit to some tax friendly jurisdiction, what this NTA is saying is that regardless of where you are, you go to a jurisdiction where the income tax is zero. It means that in a Nigerian entity, if you are the parent of yourself over there, you then need to make up that tax. Because what may be happening is that you're shifting the revenue to that jurisdiction in an attempt to reduce your group tax obligation.
Yeah. And banks, Nigerian banks, and some other companies that have all those need to be mindful of those provisions, I think.
Thank you. Very insightful and interesting. We're coming to a close. We can continue to have this conversation again and again. We just keep unpacking things. But I would like to get your final thoughts. I'll start with Yemi. You're going to tell us, when you see this act all together, right? What does it mean for government? You've talked about how government is trying, and Chiwindu alluded to that as well, that government is trying to take their own share of the cake, right? Especially when it comes to multinationals. Where do you see the entire act putting government revenue starting from next year? The current target of the FR is about 25 trillion or so. right? Do you see them having a target of say 50 trillion next year, right? Do you see them attaining it, right? And Chiwelu, you tell us, what do you think it means for companies, for taxpayers, and then Chinedu, you just then tell us, what does this exactly mean for consultants? I mean, Chirendu highlighted some things around consultants who helps to shift profits, right? And all of that. So what does this exactly mean for consultants going forward? So, hear me?
Yeah, I think if you look at the tax acts in its entirety, you'll see that government has yielded some things in one hand and have taken back orders on the other hand. And what you will be asking yourself is, okay, will this balance out? For instance, Chinedu has spoken a lot about CGT rates moving potentially from 10% to 30%, and that impacts a lot of major players in that space. And then also when you look at VAT, where government has expanded the input VAT that is claimable against output VAT, you see governments kind of giving back for some economic development so that there's more cash in people's pockets. So you see that in and out impacts in the act. But what I would say is that if you look at everything, I would say a lot will depend on how the government use technology to improve tax administration and tax collection, because everything boils down to implementation. You can have all those provisions of where a foreign company should have deemed some deemed profit that should have accrued to a Nigerian parent. I'm going to tax it. But how are you going to see it if you don't use technology? How are you going to effectively monitor tax compliance if you don't use technology? Because you can have a beautiful law, but implementation may be shady. You understand? So I would say government has started well in quotes with the e-invoicing and daring people to connect their ERPs to the FRS accounting software, but that accounting software, but that's at the FRS level. What about the state level? How much technology would they be deploying to make sure people are compliant? So for me, in summary, yes, the act potentially should increase government revenue, but the real impacts will boil down to whether government can actually use technology to achieve their objectives.
Thank you very much. Chirendu?
Yeah, thanks, Doctor. So if I look at the act and say to myself, what should companies do, or how should companies, approach the corruption that we have? I think during the webinar I did mention that it's no longer business as usual. What that means is that there has to be an increased level of education of every stakeholder of the company, be it the employees who are going to be dealing with invoices and all that, suppliers and all. There has to be a complete education. We also need to look at tax strategies. We're at a meeting yesterday where a company is looking to restructure. The conversation is also going to how does the NT impact on what we're trying to do going forward. So companies need to look at that to say, look, if you are planning divestment or acquisition, conversation needs to center around how does the NTA impact in your future plans. So you also need to have some form of investment in technology. Like they did mention technology on the side of the government, but I also think that taxpayers also need to make some investments in technology, particularly with respect to this e-invoicing need. So I'm upgrading your ERP, please. So some investment needs to go into that. And training, you can't overemphasize the importance of training. And also looking at your tax, your internal process. If you have a document that speaks to how you treat items, that document obviously is going to have to be updated. And the new tax law and how that is going to impact every information. And carrying every stakeholder is very, very important. And he mentioned during the webinar that the taxpayer who is proactive, who takes it upon themselves to look at how the new law is going to impact their business, will actually stand a better chance adapting to the new law rather than staying behind to say, because sometimes you speak to some taxpayers and everybody will say, well, let's see how it to pay out to 2026. But don't forget that you have a system that will address certain things. You have a system that will speak to how customer invoices have been treated. You have a system that will address how new suppliers are going to be onboarded. And there is a requirement on your part to make sure that whoever you are onboarding, someone who is tax registered, because there's a penalty for awarding a contract to someone who's not registered. So those things are not things that would have to wait till next year. Those are things that need to happen now. So taxpayers need to be proactive, evaluate the entire provision, get a tax consultant if necessary. I mean, I will advise that they get a tax consultant to take you through how the new tax law is going to impact your business. And there are changes that you need to begin to make now. This is the right time to begin to new person.
Yeah. Thank you so much. Chinedu.
All right. I mean, thanks, sorry. Let me start by saying this. I mean, the government has gone to great lengths to explain that the primary purpose of the tax law is not revenue. It is more of improving the business environment and making sure that it's simplified and people know what to do to be compliant. Like I said earlier, the tax law changes are generally positive. I think most practitioners agree that was the right move. We need to improve the ease of doing business in Nigeria, especially when it comes to compliance and regulatory issues. And this tax law will help achieve that. However, if there are instances where it is clear that the provisions of the tax law is going to impede growth in the economy, or it becomes clear that certain provisions are going to be counterproductive to the general reforms that the government is doing, I think it makes sense for the government to visit those kind of provisions. Again, thankfully, the tax law itself are already provisions for executive order and guidelines and all those kind of things. In the case of CIT unit, in the case of fuel surcharge, there are already provisions for this start, they intervene with a certain legislative order. So that can follow that route to give some buffer, especially the issue of PET or shares, for example. If it becomes clear that will impact the equity market, maybe that will be so company can look at that. At least give like 2-3 years with the just like they did for the free trade zone guys to allow the economy to grow a bit and big. We've been through very painful reforms, and it's important that we see the end of that reform so that we can get the benefits. If we have any provisions in the law that truncates the reform, all this pain will be for nothing. Now, on the issue of work on the consultants, even the law itself, talks about like pre-qualifying consultants, or consultants have to meet certain criteria to even be seen as tax consultants. There will be, again, they said there will be guidelines on what that essentially means, and we'll wait for that. But clearly, consultants need to raise their game. The laws have changed. There are so many implications. People focus on certain narrow areas, and in fact, impacts the need to but companies, global companies, and Nigerian companies have to look at this holistically and see what it means for their business, even their business models. So consultants have a lot of work to do in terms of reviewing impact assessments, reviewing business models, even having to change, business structures to be compliant or take advantage of additional planning opportunities. It's possible that the structure you have currently is no more working. It's possible that the current business structure is no more efficient going into the next year. So these are the kind of things that consultants will help you with. So consultants will have a lot of work to do, but they have to first up their knowledge, up their game, be ready to help companies to comply. I believe end of it will be generally positive for the economy to increase compliance level. Somebody joked with me and said, at the end of the day, it is people that have been complying, I will say comply. And the majority of people who are already complying will still not bother whether you like, But like Amy said, I think technology will help. The more the administrators are able to use technology to get more information, be able to target a certain layers of the informal sector, I think it will be good for everybody in the town.
Thank you very much. That's draws the curtain to this conversation. Hopefully, we can continue to engage some of our followers online via social media channels, LinkedIn, Facebook, YouTube. We're going to upload the video as well so that you can make references to certain parts that you may have missed out on. Thank you very much, my panelists, for joining. Thank you.
Thank you.